You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
All right, welcome back, everybody. Welcome back, Brandon. How you doing there in cold Canberra? I saw you posted something on Instagram about it being negative something degrees in Canberra overnight, or very chilly.
It's actually been like Canberra sometimes is just real cold, like real crispy fresh in the mornings, like with frost and -2, -1 or whatever, and then it's clear enough so that, you know, in the middle of the day it's still freezing, but it's actually like good weather. But today it's just terrible, man. It's terrible.
Oh no,
it's super overcast, and like it's like not raining, but it's not mist either. It's somewhere in between.
Yeah, right. We've had a couple of nice days actually. Cold, it's been very cold overnight. We had a -1 overnight, which is
really
kind of rare-ish for Melbourne. Doesn't happen too often. I think you get the much colder overnights, but the days have been good. It's been sunny, so I got to get out of the house.
That's good. You've been playing your golf?
I have not played golf in so long, and I'm really bummed about it. I want to get back out. I just every time the weekend rolls around, I don't have time to do it. But I have to give it a chance soon. I don't know.
Yeah,
we
need the weather to be a little bit warmer, maybe.
Yeah. We'll have to go back to Top Golf. That was fun.
Man, how good was that, man? Top Golf, such a genius invention.
Yeah, very smart. Yeah,
it's like they've turned the idea of like the bowling alley into just like golf. Yeah. It's so good because it was like, you know, you get a burger, you get some chips, you get a drink, you have different game modes you can play. Like we were playing like the Angry Birds version of Top Golf and stuff like that.
Yeah.
No, that was great.
Yeah.
What a trip. You got to stop bringing up that trip. That was so good. I just want to go back to the States and do it again.
Till we go back.
Yeah. No, we definitely got to make a habit of going every year.
Yeah.
Oh, so good.
Oh, dear.
So good. Anyway, earnings season, mate.
Yeah.
Earnings are upon us and will be over the next few weeks. So your favorite, Netflix, has already reported, which is pretty cool. And my favorite, Tesla, has also reported.
There you go. It's a week of favorites.
Yeah. So we'll go through that. We got a couple of other bits and pieces, a little bit of inflation data and a little bit of just a clarification on the Twitter Elon Musk saga that's going to be progressing. So we'll talk about that real quick as well. But should be a pretty full episode. I imagine we're going to talk for quite a while on earnings.
Yeah, there's quite a bit to kind of break down in Netflix, and I think Tesla had quite a bit of some interesting kind of data points, as is the case, I think, with businesses at the moment. Yeah.
Well, you say, sorry, I completely cut you off there.
All I'm saying is, as is the case at the moment with inflation and costs rising, there's always but it's a bit of a mixed bag when it comes to what's happening with businesses in their earnings. So there'll be a lot to talk about.
Very true. Also, we have to say sorry about the podcast, guys. Oh my gosh.
I made it worse.
You did? You made it? No, well, I don't want to put any blame on you because you're actually the one that decided to take it on and try and do it. Because we got that message a couple of weeks back saying, it'd be so cool if we could get the video on Spotify. Yeah. So there were like a whole bunch of different hoops we had to jump through to try and get this video on Spotify, which we still haven't done. No. The video is still not on Spotify.
So whoever made that comment, we blame you entirely. No, I'm kidding.
We definitely don't. That comment has led to an unfortunate series of events, hasn't it?
No, but
because we had to shift the podcast over to Spotify's podcasting service.
We moved into a new host,
Anchor.
Yeah,
their host. And then we had a problem where we already had a Spotify feed going. We already had our feed of podcasts showing up on Spotify. And then we were updating our podcast last week onto Anchor, and it wasn't showing up in the feed. And then Hamish figured out that it had now created 2 different feeds of the Young Investors podcast. All the ones that you guys would listen to with the reviews that you guys have subscribed to and follow, it wasn't showing up there, and it was showing up on some other feed that Anchor had just created. So, So like for a lot of you Spotify listeners, you probably wouldn't have seen the podcast from last week.
Because you click follow on the podcast, but it actually wouldn't have appeared in that feed. It created its own new kind of feed. So
my gosh, it was hell.
Yeah, if you'd kind of searched for it, I think you would have found it. But just looking in kind of your saved podcast, you probably wouldn't have seen it there. But now I think it's fixed. I'm pretty sure. I checked this morning.
I checked this morning as well.
I haven't got video. We haven't tried video. I might try again this week.
Yeah, let's try it this week.
Without trying to disrupt just the normal release of the podcast. But other than that, everything else should be smooth. And I think we weren't actually releasing on Google Podcasts before, and I think we are now. I'm pretty sure it wasn't.
Really?
Yeah, I'm pretty sure. I'm pretty sure we weren't. So I think we've actually expanded a little bit.
Young Investors Podcast. We are the height of podcast professionalism.
Oh, yeah.
Here at the Young Investors Podcast.
We don't leave anything to chance.
Allegedly.
All right. Well, today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically by connecting your broker, or you can use Excel to add them and import them in, or you can add them one by one. And when you do that, it will track all of the gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans, it will do those calculations for you, which is a lifesaver. Currency gains, if you're buying shares internationally or you hold foreign currencies. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used to track the performance of your portfolio, diversification, and use the tax time to work out things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So use that link, sign up to a free plan. You can track, I think, up to 10 holdings for as long as you want. So you can just try the free plan. And if you only have a couple of stocks or a couple of index funds, you can just use the free plan forever. But if you go through that link and you decide at some point you want to sign up for more features, you'll get 4 months of a yearly subscription, and you'll also be helping to support the podcast. So thanks everyone who has used that link when signing up.
Now, I do want to talk, I want to get your take on Netflix earnings, but before we do that, I just want to cover, this is not huge news, but it is a direct follow-up on what we're talking about last week, which is the Elon Musk Twitter deal. So I think I'll just run through this real quick, just off the top. So the article headline, Twitter Musk trial on $44 billion deal set to begin in October after Musk loses effort to delay. So this is follow on. You know how last week I was saying Twitter are definitely going to sue Elon Musk. They're going to take him through the court system, see if they can force this $44 billion acquisition. Well, it looks like that is going to take place in October. It says Delaware Court of Chancery Chancellor Kathleen McCormick ruled in Twitter's favor on Tuesday for an expedited trial to force Elon Musk's $44 billion acquisition of the company. The 5-day trial will take place in October. During the hearing, Twitter's lawyer, Bill Savitt, argued that Twitter's request for a September trial was well in line with timelines for similar cases in the past. He added that a quick trial schedule is imperative to stop the ongoing harm Twitter has experienced from the uncertainty of the deal's closure and alleged disparagement by Musk. Savitt also alleged attempts by Musk, who's also CEO of Tesla and SpaceX, just in case you didn't know that.
Really?
Savitt also alleged attempts by Musk to delay the trial might be a ploy to run out the clock by leaving little time for appeals before the debt commitments he made to finance the deal expire.
Right.
Then on the flip side of the equation, Musk's lawyer, Andrew Rossman, argued the expedited timeline was far too aggressive for his team to review the massive data trove at Twitter, which Musk wants to review to verify the percentage of spam accounts on the platform. So there's kind of you can obviously tell there's two different arguments at play here.
Yeah, and there's probably merit to both of them to at least some extent, like some actual practical merit beyond just kind of a legal argument. But it actually is interesting because I think I said last week I wasn't actually sure if they could, if they were talking about actually forcing him to go through with the deal, I didn't think that was something they could do, but that's crazy that they can actually decide in court, yeah, you have to make this deal, not just that he would have to pay to back out of the contract. Is that,
Yeah.
I think that's right. So
Yeah, well, that's where my knowledge just isn't adequate enough. I'm not a law person. I'm not a lawyer. I just don't know what the outcome would be.
Yeah.
But yeah, it says Rossman charged that Twitter wants to continue to shroud in secrecy the number of spam users and failed to provide the information Musk asked for of the company earlier. That's kind of what we were talking about last week. Savitz said that determining the percentage of spam accounts is not necessary in this case since, quote, nothing in the merger agreement turns on that question. So lots up in the air. Lots up in the air.
That number can't be good if they're not just disclosing.
If they don't want to, yeah. That's kind of my.
I really hope that
well.
comes out and it's like 40% or something ridiculous.
It would be quite funny.
That would just be hilarious.
Jeez, imagine that would be the end of Twitter. Because imagine how many businesses that have advertised through Twitter would try and sue Twitter to get their money back.
Yeah.
Because
true.
like 40% of their advertising budget was effectively blown by Twitter on bots.
Yeah.
That would be so interesting. You imagine if you're a big company and you spent millions and tens of millions on marketing through Twitter, and then all of a sudden Twitter says in their filings that 5% of their users are spam. And then all of a sudden, it turns out that for the last 10 years, more than 40% have been spam. You'd be like, hey, give me my money back.
Yeah, there might be a legal protection for Twitter on that. Since you can kind of, I'm sure, I mean, if you're running a marketing campaign, you can kind of see the results anyway, like on an ongoing basis, and you're kind of deciding whether to keep the budget at that level. I don't know. But
that's a good point.
You're right, though. You'd hope they'd have some protections for that if something like that came out because, yeah, they would have a lot of exposure. I don't think I've ever actually noticed a Twitter ad. And I'm not sure if that's because there's not that many ads or if that's because the ads are terrible. Like, I obviously notice YouTube ads. Like, I can, you know what I mean? Like, you know that I've never actually, now that I think about it, I use Twitter a lot and I've never actually seen an ad as far as I'm aware. I don't know. I mean, I must have seen ads, right?
Yeah, they're just all sponsored posts. They're all promoted. They've just got that little promoted symbol underneath them, but they just look like regular Twitter posts a lot of the time.
Yeah. Okay.
If you scroll, you find one.
Yeah. Right.
Or are you one of those people that pays for Twitter Blue?
No.
Anyway, definitely not.
Oh dear.
But yeah, sorry. That's like just a little quick follow up on the Elon Musk Twitter deal. It's going to be decided in October, so we'll have to keep an ear out for that. There will be many updates from here until that date, I am sure.
Yeah. Oh yeah.
So we'll just stay tuned.
It's good that they kind of expedited it, maybe not for Musk, but for the fact that we get to kind of see, because usually these cases go forever. I mean, even the Theranos trial, I mean, that was it was so dragged out, and we still haven't gotten a sentencing, I'm pretty sure, for her, even though the case ended last year, I believe. I don't think
okay.
So, I mean, look, these things, they usually take years to unfold, and it's like, oh yeah, remember that case, 3 years ago? Yeah, they decided it now. It's like, okay, cool, I don't care anymore.
Oh, right. Wait, what was that again?
Oh, she got 20 years in
jail?
she got 20 years in prison. Cool. Like,
okay. Yeah. 2022, and it's finally the Enron case has finally been.
Well, it's like that. The Theranos, when was that? It was like 2014 or something. We're in 2022, and she still hasn't been sentenced yet. I mean, it's like almost a decade. It's it's kind of crazy. Maybe it was like 2016. It might be closer to 6 years or something like that. But some of these cases can just take so long. Has she been sentenced yet? Maybe.
I don't know. I'm trying. No. Elizabeth Holmes will be sentenced on the 26th of September 2022.
Yeah. So I think the case closed. It must have been at the beginning of this year, I think. So then they have another 6 months before they do the sentencing.
Right.
So she was found guilty, obviously. And we have to wait 6 months to find out how many years she'll get, which is just it's kind of strange.
It's bizarre, isn't it?
Yeah.
Yeah, that is bonkers. Anyway,
Yeah.
that's the legal system, I guess.
Yeah.
Not something that I know very much about at all.
Clogged up. They need I don't know. Yeah, I don't know much about it either, but it's just notoriously backed up in every aspect. So I don't know what they can do.
They just need to do lightning rounds. They need to do like,
what did you do?
like
Drunk driver? All right, you get this. Next.
Yeah. Stamp. Guilty. Next.
Yeah.
No, then I'm thinking even crazier than that.
Okay.
You know how it's like, what do they call them? The psychologists, where they show you a card and like, what's the first thing that comes to mind when you see this picture?
12 years, 4 years, probation.
The most unfair legal system you could ever think up is just the jury sits there, they hold up a person's mugshot, and then they go, guilty 5 years.
5 years. He appeals. Appeal denied. Oh, boy.
And that, folks, is why we are not in charge of the legal system.
Yeah, probably wouldn't go
Have
down
nothing
too well.
to do with it.
No.
Oh, dear. Anyway, Netflix.
Anyway,
Hamish,
let's talk about Netflix because it's kind of the story.
hang on, do we have time? We're 15 minutes in. We've got 45 minutes to go. Will we have time to get through this
Well,
bit?
this is a 2-hour episode, right? We're doing 2 hours
Oh,
today.
okay. Yeah, right.
So
right.
we've
Okay.
got an hour and 45. I think I'll just get it in that
Right.
time.
Yeah, you start. I'm just going to go get some sushi. I'll be back in 20 or so.
Okay. All right. No worries.
Okay.
All right, guys. No, but
Now that we're alone.
it is kind of the story of the week. Though everyone's been kind of looking to see what's going to happen with Netflix because there's a bit of an update. Last quarter, they lost. What was it? They lost.
Give me some context.
So
give me the last quarter's context because they lost a lot of subscribers.
So
700,000 were for Russia.
Yes, so they lost.
Yeah.
So they lost 200,000 overall, but 700,000 was from the departure. They withdrew from Russia because of the war. So if we're being real about the performance of the business, they only gained 500,000, which is still a massive slowdown. And then the big news was they projected for the next quarter, which we just got report for, they projected negative 2 million, which was a big loss, irrespective of the Ukraine war and all of that stuff. They just said, we're going to lose 2 million subscribers. So that was massive. And on that news, the stock fell 50% in just the space of a week or so. So that guidance was, I think very much baked into the stock price. So that gives you kind of context of why this earnings wasn't. I wouldn't say it was good, but it was better than expected. As a result, the stock actually went up massively after this earnings. So. In terms of their top line, so we'll work our way down. Revenue came in at $8 billion, which was up 8.6% year over year. So single-digit growth in revenue, which is, again, a bit of a shake-up for Netflix. They actually grew revenue by 13% if you exclude the foreign exchange impact. So they had a $339 million FX impact. And that's really just the result of the fact that the US dollar is getting a lot stronger relative to pretty much every other currency. And Netflix collects most of their revenue in other currencies. And also hurting their margins, they pay most of their expenses in US dollars. So they're actually in the worst situation for where the Federal Reserve in the US is raising interest rates and the US dollar is getting a lot stronger relative to other currencies. Of course, it's foreign exchange, so it can always swing the other way. And I think it's probably reasonable to expect that other central banks are going to be as aggressive as the US has been in raising interest rates. So there will be somewhat of a swing back and forth as, depending on what inflation numbers come out and what interest rates are given, hikes are done in different regions. It's reasonable to expect there's going to be kind of fluctuations back and forth on those currency, but big impact. What was it, like almost 5% in their growth was wiped away because of FX. So in terms of subscribers, they had a 6% year-over-year increase in subscribers, but that's of course not what anybody cares about. Everybody cares about the quarter-over-quarter increase, since it's kind of a recurring revenue subscribe model. Quarter-over-quarter subscriptions declined by 970,000, so not as much as they expected.
So somehow they've beaten their guidance.
Yeah. And this is what I think most people really thought was going to happen, because negative 2 million seemed like the biggest sandbagging of all time. Like it kind of came out of, it seemed very much that the stock had already been down, I think like 50%. So he was just like, stuff it. Let's make sure we don't miss guidance next quarter. Let's be super, super conservative. And that way there's no surprises and we can just get it all out of the way. So that's what happened. But still, I mean, it's funny because the stock was up, I think, like 13% or something during the day and after hours. But they lost 1 million subscribers. So it's not exactly great coming from, the last 4 or 5 years, where on average, I think they've gained about 25 million a year, which is, 7 or 8 a quarter. So, it's kind of a big shift. We'll talk about that in a little bit. They had a 2% increase in revenue per membership. But if you exclude the foreign exchange, the revenue per member was up 7%. So they've been able to continue to kind of drive up prices across the board, and more than offset the slowdown in subscriber growth, and also the decline in subscriber growth with additional revenue per subscriber.
That's interesting. Yeah.
In terms of their biggest hit, that came from the UCAN region, the US and Canada region. They lost 1.3 million subscribers in the US and Canada. So that's where most of the pain is. I think they lost 700,000 in the Europe and Middle East and Africa segment as well. And then they had gains in Asia, and Latin America was kind of flat. So... yeah.
Biggest hit. I find that phrase interesting because biggest hit can mean both something really positive or really negative.
Yeah, that's true.
It's like their biggest hit was in the UK. Oh, that's awesome. They had their biggest hit. No. Their biggest hit.
Yeah, I didn't actually think about that. Yeah, no.
No, we get what you mean.
Biggest loss.
Yeah, biggest loss. Yeah. No, that's interesting.
Yeah, year over year, also the UCAN region only had 9% revenue growth, which is quite a bit slower than what has been kind of historical. Again, they reiterated they spoke about this on their earnings interview that they do every quarter, and also in the press release. They kind of just reiterated the 4 key factors that have been impacting their results. The first is adoption of connected TVs. So how quickly, particularly areas like the Asia Pacific region and Latin America, how quickly people get TVs, smart TVs that are capable of using Netflix, and even people just having, widespread laptops and access to the internet. These are things that, especially in developing areas, it's very much out of their control. Competition, I'll talk about that in a second. Macroeconomics, primarily they cited inflation as being making people a little bit more price sensitive, and then account sharing, which is kind of this problem they spoke about last quarter, where they said they estimate there's about 100 million households that are using Netflix and not paying for it. They're
trying to stamp that out, correct? They're trying to. Yeah, kind of make people. But it seemed, what were we talking about last quarter? It was like an honor system, wasn't it?
Yes.
So that account sharing, you kind of have to be like, yep, I'm sharing an account. I'll pay, but really you could get around it.
Yeah, so they spoke about this a little bit. They've been doing some testing in some Latin American regions, and they've been testing kind of 2 models. One is to ask people to add an additional household. So if they recognize there's an additional household using the service, they ask them. And the other was to ask them to add another user if they recognize that another user. They seemed pretty confident. They didn't talk about the tech behind this, but they seemed pretty confident that they can reasonably determine if an account is being used in the wrong way, because you can imagine it would be quite difficult, because I might take my laptop out with me, to a different household, but it's still me using it. Or I might be traveling, or I might, maybe my parents are split up, so I'm living in 2 different houses, but it's still me using the same account. So there's kind of a lot of use cases, but they seem to be pretty confident they can determine, what is what. I think the main point here is, though, you're right. They're just going to be asking people. It's not going to be a hard fix. And the point isn't to collect on all those 100 million. If they collect on 5% of them, that's 700 million in annual recurring revenue that they can capture, just 5%. So that's, very, very significant, depending on where they capture those from as well. If they capture them in the US, it'll be much more revenue as well because they're a higher revenue per subscriber. But, you can imagine that's like 4 Stranger Things size projects per year that they can get just from 5% of people, who are not using Netflix to start using it, to start paying for it. So that's where the opportunity is. I think it's been blown out of proportion. Everyone's kind of been like, well, it's not, like they should just let everyone share their accounts and stuff. And I think most people will still be able to share accounts if they want to. But there will be some people who get that notification asking them to pay for the extra household, and they will. And if they can collect 5-10% of them, then, it's not just beneficial to Netflix, it's beneficial to the entire subscriber group who get, a huge amount more content available to them.
Worst comes to worst, you could just do like, I don't think Netflix would want to do this, but you could just do like 2-factor authentication for the various account holders, right? That would stop people pretty dead in their tracks. Yeah,
exactly. They could definitely do that. And obviously they're not going to, require people to do that every time you want to click on Netflix. So, people could still get around it, but it is one extra step that does kind of help. I think there's a number of streaming services that already do require 2-step authentication, but I think there's the bottom line is that it's going to be impossible for them to crack down, entirely on this. We've spoken about this a few times, so it's going to be difficult, but they're working on it. Interesting to see what they come up with. They spoke about competition. It was interesting to hear management was talking about how they believe that the subscriber growth issues are more a result of people being a subset of their subscribers being price sensitive rather than it being in relation to competition or a decline in the value of their service. So this has kind of been a big debate recently of whether Netflix's service has gotten worse and as a result people are leaving, or whether it's because there's other better services, HBO Max and Disney Plus. So people are just now realizing these other services are better, so they're switching away. That doesn't seem to be backed up in the data, and management provided quite a bit on this. Netflix still has the largest share of US TV viewing over the last year. So if you take the whole year, they're the largest. Even the second closest, they are double the size of. So the second closest was CBS, which is a massive broadcast and cable network in the US. And they're double the size of it in terms of viewing minutes. And then they also released the June 2022 data specifically. They hit 7.7% of US viewing time, which was the highest above any other streaming service, including YouTube, which I've spoken about before, how that's kind of insane. A service that costs in the US $15 to $20 per month gains more viewing time in terms of minutes on television than YouTube does, which is a free service. So that's kind of an insane stat. So essentially they're using that data as an indication of, hey, our sub base loves our service. There's just a subset that are price sensitive. So as we've pushed up prices and as inflation and these other macro issues have hit, we're losing this kind of bottom section of their subscriber base. And as a result, that's why they're bringing in this advertising tier where it's going to be a lower cost subscription with advertising to kind of try and recapture that bottom tier, as well as potentially capture some of those people sharing accounts and not paying, as well as people who just wouldn't have considered Netflix at all because it is a pay TV option.
Yeah, I don't believe for a second that people are cancelling their Netflix subscriptions because they're going to a different streaming service.
No. Yeah.
The only reason that I think that they're cancelling is because it's a small luxury and they're getting squeezed at the moment with macroeconomic factors and they need to just save money.
Yeah, I think that's...
So they cut it.
I think it's kind of ridiculous to ignore the macroeconomics that's going on. I mean, you could possibly think, and I think it's reasonable to think that Netflix would hold up quite well in tough economic conditions as people spend less time outside of their house. But we really don't know. I mean, we haven't seen an inflation crisis like this in our lifetime. So certainly while streaming services have been around, so we don't really know like how consumers are going to behave, and we may see more of this across other streaming services. Although with Disney Plus and HBO, it's kind of being shielded by the fact that they're nowhere near the size of Netflix yet. So they're still growing, and it looks relatively, why are they not also struggling? Well, they're at 30, 40 million subscribers. They have this huge base of people who are not subscribed yet. That, if they were the same size as Netflix and they were still growing and Netflix wasn't, then I think you could make an argument for that, but they're not. So, they're kind of shielded from that effect, but it will be interesting to kind of see how it plays out over time. And I think a lot of, again, as I spoke about last week, a lot of the discussion around Netflix is around the US business, which is extremely saturated. They have like most of the market, especially if you include the shared TV. So there's not much growth is going to come from the US anyway. The real question is outside of the US, which is where the huge opportunity for growth is. Can they continue to reignite growth in areas like Latin America and the Asia Pacific region? So that'll be where it'll be interesting to watch. I don't know if we spoke about it, but they signed a deal with Microsoft.
Can you explain that? Do you know much about that?
Yeah,
because
so
all I know, all that we've said so far, all I know about it is that they signed a deal with Microsoft to help bring viewers the ad-supported experience.
Yeah, so they're going to be doing...
That's all I know.
So Microsoft is going to be doing all the tech and the ad sales behind advertising on Netflix. So it's an exclusive partnership.
Right.
And they spoke a little bit about this on the conference call, on the interview, about why they went with Microsoft. And they said that Microsoft gave them a lot of flexibility in this kind of partnership of creating and just innovating in the space. They didn't really go into details of what kind of innovations or ideas they had, but they think that there's an opportunity not just to slap TV advertisements into the middle of Netflix shows, but maybe to add some more technology. I know that YouTube, for example, if you're watching YouTube on TV and there's an ad that comes up, if you pull up your phone, I think if you have an Android phone, it just comes up immediately where you can go straight to there's like a pop-up that comes up on your phone. So it's kind of YouTube is connecting with your phone to make a seamless transition. And I'm sure Netflix will be working on something like that. So Microsoft kind of gave them the flexibility, and they didn't say this, but it sounded like Alphabet, which they could have done a deal with, of course, probably just wanted to kind of handle it all, and they probably didn't offer as favorable of a deal, especially considering YouTube is basically their biggest competition at this point. So fair. That's the kind of deal. They said the tier will likely be coming to developed ad markets like the US, UK, probably Australia as well in early 2023. So that's what we can expect going forward. Interesting side note on that. In a lot of their contracts for licensed content, they can't run advertising, so they have to renegotiate a lot of their licensing, which is not a big problem at the moment because most of their content is exclusive now. It's owned by Netflix, produced by Netflix. But for content like The Office or Friends, when they have these long contracts, maybe it's multi-year contracts, they actually have to renegotiate them. So it just gives the networks the opportunity to add 10, 20% onto the price, and Netflix can't really do anything about it except for maybe cancel the contract. So that's an interesting kind of element that it is just kind of a nuance of adding an advertising tier that maybe some people might not have thought of.
Yeah, that's interesting.
Yeah. All right, I'll wrap up soon because I know I've been talking for a little while. But just in terms of content, Stranger Things 4 was their biggest English show of all time. Hit 1.3 billion watch hours in the first month, so it was a massive success. And then in terms of Emmy nominations, which came out I think last week, they were nominated for 105 Emmys, so a little bit less than last year. Squid Game is nominated for 14, Stranger Things for 13. HBO beat them this year. So last year, Netflix beat HBO for the number of Emmys. This year, HBO got them, and they had a number of great shows come out. So I'm not surprised by that. They had 140. The two biggest was Succession with 14 and Euphoria with 16. So, yeah, there you go. It's always interesting to watch that battle go back and forth because HBO makes far less shows than Netflix does, but they make extremely high quality shows. So it is always interesting to see, Netflix's high quality shows go up against HBO and see it in that respect.
Interesting.
There you go.
Man, that first number, Stranger Things, 1.3 billion watch hours in the first month. I was just tapping away on the calculator. 1.3 billion watch hours in the first month is the equivalent to 148,400 years.
Jeez. Oh my goodness.
148,400 years.
Yeah. I hope
that.
I really hope that HBO Max and Disney Plus start releasing. I know they don't have as big sub bases, so their numbers aren't going to be as big naturally. Like that's just what it is. But I want to see some comparisons. I want to see Succession is an incredible show. I'm watching it at the moment. I just started watching it last week.
Right.
And it's incredible. And you like Euphoria and Better Call Saul. I want to know. I want to see the watch minutes on these. I want a side-by-side comparison like we can with YouTube videos, where we can see a one-to-one. None of this rating stuff from the past. I want to see how many people are watching them. And like they're not gonna hit Netflix numbers because Netflix has far more subscribers. But I still want to see it.
You just want more flavor. But you know that if they can't match Netflix, then they're not going to tell anybody.
That's the thing, right? Yeah. Well, Disney overall with all their subscriptions has almost as many subscribers as Netflix, but I'm sure their shows on Disney Plus just don't get anywhere near as many views, unfortunately. But I'd love to see that.
It's so interesting, the evolution of Netflix as a business, and even how we've looked at it over the years. Because how many times, like when Disney Plus was just coming through, we were like, oh, here comes the competition, because it did look like Netflix was in a genuine spot of bother. When we were looking, they were adding just bucket loads of debt to try and keep up. But credit to the management team. They've done it very, very well. And they have maintained their number one spot in streaming. You can't argue with that. Like the data shows that is true. Yeah. That is objectively true. So props to them. They've done a good job. Yeah. Reed Hastings has done a very, very good job.
Yeah. Certainly the most interesting aspect of it is the divergence between subscriber growth and watch minutes. Sub growth is slowing and hurting, but how people are engaging with Netflix has just, it's the best it's ever been. It's exploding. And that's an interesting aspect that makes sense in, I think, the macroeconomic environment that we're seeing, which is people are a little bit more price sensitive, but they still do want to engage heavily with, or the people who do keep Netflix on as a subscription do want to still engage with the content.
It's like YouTube. You as a YouTuber, would you rather have 1 million subscribers and terrible engagement, or would you rather have fewer subscribers and really strong engagement? You definitely take fewer subscribers, stronger engagement. Yeah.
The engagement is kind of the core of their business overall, and everything else should kind of come from that. Given short-term events that impacted anyway. But
all right, let's wrap things up on Netflix.
That's it. Oh, that's just the first half.
Long enough. Oh, yeah. So, and now the earnings call.
Yeah. That was just Q1. I haven't even got to Q2 yet.
Oh dear. Well, I will endeavor to keep Tesla short, because Tesla's the one like Netflix for you where I can tend to dribble on. It's not even that I'm like, see, you're talking about like, oh, this is, value investing stock, competitive, blah, blah, blah. I just like Tesla because I think it's a sick company. Like, I just really like to follow it.
Yeah.
People always mistake that when I make videos about, or if I make a video about Tesla, they're like, oh my God, you talk about value investing. How can you talk about Tesla stock? Most of the time, like that video I made a few months ago, I'm just talking about the business because I think it's a really interesting business.
Yeah, it's a cool business.
That's well managed and shows very unique growth patterns for an automaker. So anyway, Tesla earnings. Get ready. Here we go. We already knew what deliveries were. We spoke about it a couple of weeks ago. So deliveries were down. Remember, just to fill you in case you didn't hear that episode, deliveries were 258,580 for the quarter, which was down 15.4% in Q2. And remember, that was due to the Shanghai Gigafactory being shut down or operating at significantly reduced capacity for almost the whole of the quarter.
Yep.
That's now over because they said that in June, the Shanghai Gigafactory had its record production month. So hopefully, fingers crossed, that's all over. I'll just start with the numbers first. So revenue came in for the quarter 16.9 billion, so up 43% year over year. So quite a drastic rise in revenue. Their gross margin for the quarter was 25% versus 29% last quarter. So they've definitely copped a little bit.
Feeling the pinch.
Sorry?
Feeling the pinch.
Yeah, feeling the pinch as a lot of businesses are at the moment. Operating margin was 14.6% versus 19.2% last quarter. I remember last quarter I was like going 19.2%. This is amazing. So it's dropped back down to 14.6%, which is where it was in Q4 of last year, I believe, roughly. Net income. So they make 16.9 billion in revenue. Their net income was 2.3 billion. So they don't keep much of that, do they?
No. Tough business, the auto business. Very capital intensive.
Yeah, definitely not a SaaS business. So net income of 2.3 billion versus 3.3 billion last quarter. So they have taken a hit this quarter as well, to be expected. Their business is selling cars at the moment, and they didn't sell as many cars. Capital expenditure. So capital expenditure remained about the normal levels, 1.9 billion for the quarter, and free cash flow came in at 621 million versus 2.2 billion last quarter.
Yeah. And
that was interesting. Obviously, you can look at that and be like, oh my God, it's so much lower. That is correct. But I also think that's very, a quarter where their global export hub was effectively shut and they're still pumping 621 million of free cash flow. Like, granted, it's not a lot. I get that. But it's pretty impressive that number's still in the positives. They did add, they added 800 million to the cash pile for the quarter, so they're now up to 18.3 billion of cash on the balance sheet.
Oh, wow. They've got a lot of cash.
Yeah, they are in a very nice position. It wasn't all that long ago where they had like 2 billion in cash. Granted, the company was a fair bit smaller because it's grown so rapidly. Even if you go back just a couple of years, the company was drastically smaller, but like $2 billion of cash in the bank versus 18.
Burning like $1.5 billion every 6 months or something.
Exactly.
It was like, oh, they have enough for the next quarter and a half. Okay.
And then that's the magic. Like, well, that's just what sometimes these things happen. The stock just like 10-15x'd itself, and then they just raise capital.
The old Hertz strategy.
It's like barely any dilution and just have a whole lot of money. There you go. Take it. Sure. All right. Thanks.
I wonder how many companies in the past that just went bankrupt because they never got picked up as a meme. Like stock for the short term. Like that's like a savior for so many companies. Like even Tesla was like basically a meme like during that period. Like I feel like if you were just doing pure fundamental analysis, I mean, of course, I guess there's always been speculators on stocks, but it definitely got picked up in the media as like this, this growth story, this visionary company. And that definitely drove their ability to survive during the short term, which is really fascinating.
It was heavily shorted as well as the most shorted stock in America,
That's right.
which helps when things start to swing the other way and the shorts have to leave. So, but yeah, you're so right about this kind of meme stock stuff. It's kind of like if I was the CEO of a public company and my company was looking like, it's gone, I would just make a ton of fake accounts on Wall Street bets and just start talking about my company.
Yeah.
Just be like, so guys, calls on Brandon's Electronics? Question mark. Looks good, right? Question mark. Like,
oh boy.
Yeah, just start your own meme stock.
Yeah. Oh god. Or you buy a gold mine.
Or
that's the alternative.
Yeah, true.
Get into that hype. So
yeah, exactly. Anyway, all right, back on track. So that was they're the numbers, but with a company like Tesla, I like to look at the operations, and I don't say that like stupidly, like, oh, you don't need to look at the numbers, you just look at how they're doing and whether their factory's open, and then it's all good. But like a company like Tesla, I mean, there's so much going on. It's just really interesting to look at their operations as well.
Yeah.
So they had a couple of things that are non-automotive. So they had 106 megawatts of solar deployed versus 48 megawatts last quarter, and I looked back, 85 megawatts in Q2 of 2021. So solar had a really good quarter, surprisingly. So that's one that's been struggling. Just not enough attention being put towards it.
It kind of makes sense, I guess. Maybe people are a little bit more conscious about energy prices, oil prices, gas prices at the moment. So maybe that's driving people to invest in solar. Even
That's a good point.
Even though the solar, I would imagine, doesn't help in the short term, probably adds to your costs in the short term, and it's more of a long-term solution. But I'm sure people think
more
that way.
conscious of it.
Yeah, exactly. Yeah.
That's a really good point. In terms of battery storage, they had 1,133 megawatt hours of battery storage deployed, which is about the same year over year. In terms of their factories, so we got a good update. Texas Gigafactory, the ramp of the Model Y, is continuing at the moment, except we got clarification. It is with the 2170 cells. So they are still working on getting the 4680 cells right. They are expecting 1,000 cars per week. Run rate of 1,000 cars produced per week out of that factory in the next few months. I'll get back to that battery thing. Shanghai Gigafactory, they had record monthly production in June. They're also installing new equipment to increase the production pace. Then in Berlin, they are now running at 1,000 vehicles per week. They're also ramping with the 2170 cells. Although this is a little bit confusing because we thought 4680s were up and going. Elon clarified in the conference call that they do have enough 2170 cells for production for the rest of this year. So they're running with the 2170 cells across their factories. They're still ironing out the kinks in the 4680 production ramp. So he says, trust me, 4680 will be big, but it'll be big next year.
Okay. Are they just, I can't remember, have we spoken about those cells? Are they more efficient? They're more efficient, but it's like a completely different way to make them. Like the cell architecture itself, it's like a new technology. Wow.
Tabless battery cells and some of the things they do with the anode and the cathode and the manufacturing of that, it's just a different way of doing it.
Yeah.
And yes, it means that they have to put way less capex into, battery manufacturing. Huge savings, like halves the cost per kilowatt hour of battery production. But there's a lot of new technology in the battery cell. Right. So they're just ironing out and they have to be able to manufacture it at high volumes. So they have to be able to have to figure all that out. So there's a lot going on.
Interesting.
And actually another thing, which is an interesting side note in terms of kind of iterating and getting better and better, lower capex and whatnot. Thanks to, how I was talking about the large body castings of the Model Ys, how they cast the whole front of the car and the whole rear of the car and then join it together with the structural battery pack.
Yeah.
Those large castings and the parts consolidation have reduced the robot count in their body shops, I'll read it, in their new factories by 70% per unit of capacity. So there's 70% less robots to stitch the cars together.
Oh, wow. Jeez.
Yeah, how crazy is that?
That's insane.
That's pretty insane. That's a huge saving. These are expensive robots.
Yeah, I can imagine. Jeez.
Very impressive. So that's kind of updates on the factories and production and stuff. In terms of Autopilot, Andre Karpathy, who I don't know his title at Tesla, but he was one of the key kind of figureheads in terms of Autopilot. He's leaving the company to focus more on the academic side of artificial intelligence.
Right.
Although on the conference call, Elon, take this for what it's worth, Elon did reaffirm, we're now in late July, he did reaffirm that he still believes full self-driving will be feature complete at the end of this year. So
he needs to stop making predictions. He just needs to stop. He needs to stop until it comes out. He needs to be like, he needs to say nothing. And then one day it'll work. It'll be perfect. And he'll just come out and say, oh, by the way, it's out.
Mic drop.
There you go. Enjoy it. Because he's been saying it's going to be done this year for the past 3-4 years.
Like 7 years at this point. What he needs is he needs to schedule a meeting with Reed Hastings, and Reed Hastings needs to do a presentation on sandbagging.
Yes, exactly. Teach him how to do it.
Elon, this is what sandbagging is.
Yeah. What you say
you
is
set
5
very
years.
low goals, and then you smash through them,
Yeah.
and the investors are very happy.
And in the meantime, you buy stock at a low price.
Yeah, exactly. Yeah. Dear. So there you go. FSD complete by the end of this year? Question mark.
Yeah, okay, let's do a little young investors prediction. Do we think that'll actually be done this year?
No.
Yeah, I can't. I mean, one day he will be right. It'll
happen.
One day he'll make the prediction that it'll come out this year and it will happen. But given his track record, I don't know.
But here's the thing, is that people hear these kind of words from Elon and they just think, great, FSD is going to be finished by the end of the year. That's fantastic. But they don't, what he really means is his software engineers will have the features put in place that will be the building blocks of full self-driving.
Right.
And then after that, there's going to be iterations and data collection, refining. And then there's going to be regulators coming through, scrutinizing laws, back and forthing for years on end. Until it actually becomes something where you can go, take me to New York, go to sleep, wake up in New York.
Yeah.
There's still, for that to happen, there's still I would imagine a lot of years before that happens.
That's a while away, especially not being distracted while driving is like legal, like where you can just read a book or watch a movie. That's ages away. I don't think I don't even think we'll see that in the next 5 years. I don't think, unless there's some kind of really dramatic ramp in how good full self-driving is. It has gotten very, very good. I enjoy watching. I don't know if you watch those clips every now and then of people just doing test runs.
Some of them are amazing. Some of them are weird and bad, but some of them are amazing.
Yeah, it still makes occasionally just stupid mistakes even a human wouldn't make. But it looks a lot more, I think the right word is like confident. You know what I mean? Like there's been...
It's less cautious.
Yeah, if you watched it a long time ago, a couple years ago or like last year, it just wouldn't take any risks and it would just be annoying. It was just unusable. Whereas now it seems like it takes not risks, but like it's confident. Like it edges out, and it'll put its foot down. Like it really does kind of drive like a human would drive, a lot more like a human would drive.
I think previously you're right. It was like, oh, there's a gap. I'll wait. Whereas now it's just like, oh, there's a gap there. Yep, I can get it. Bang, I've got it.
Yeah.
And I'm away.
It used to be like a learner, like who just was terrified of making a mistake. Now it's now it's like, closer to like
it's getting there.
It's getting there. Yeah.
Yeah.
Not looking forward to the teenage stage where drives like it gets too confident. Beep 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 beep.
Can't stuff you, mate.
Just goes through an evolution.
Oh dear, that's hilarious. But yeah, I think ultimately full self-drive. The way I think about it is how many years do you think, like realistically, think about this. You go out, you get absolutely trashed on a Saturday night, and you're legally allowed to get in your Tesla in the driver's seat, and your Tesla is allowed to take you home legally, and you're absolutely wasted.
Look,
how many years?
Optimistic,
because that is full self-driving.
Yeah, optimistic me wants to say 5, but I don't think it's going to be 5. I think if you looked at 10, I think we would definitely have widespread self-driving cars on the road. Certainly, I think beyond 10, I think we'll see maybe entirely self-driving cars on the road. But yeah, my hopeful mind wants to say 5 years. Where
I think between 5 and 10 is about right.
Yeah, I don't know. Yeah.
Who knows? Well, yeah, we don't know. That's the reality. Who knows?
Yeah. That will be good though, man. Ubers will be cheap when they don't have to. They take out
don't
the
have
most.
To pay anyone.
Yeah, I was looking for a delicate way to put that, but like that's the most expensive part of an Uber. Unfortunately, is the human element. So being able to like remove that, will just it'll mean Ubers actually can be cheap and they'll be profitable instead of what they have been, which is cheap but not profitable.
It would be it's an amazing technology. I mean, we joke about it like being able to go out on a Saturday night, have some drinks, and then just be able to have your car take you home. But like, I think about so many people who just can't drive, or they're so old that they've either turned in their license or they don't want to drive anymore. And if they can have actually or they're like disabled to a point where they can't drive, for example, if they have a self-driving car, that's a huge quality of life boost for those people.
Oh, yeah.
Huge. Freedom of transportation goes just crazy. Yeah. So I don't know.
Even like things like grocery delivery, although I guess they could probably do a lot of that with drones as well. That technology should develop as well over time. AI drones for delivering food, delivering groceries. Like there's just so much that's going to come.
I'm looking forward to it, Hamish. I'm looking forward to it.
Yeah, I want those.
I like technology.
Where are those Uber? Do you hear about those Uber like planes?
Yeah, we spoke about that at one point on the podcast, like the drone plane things.
Yeah,
or whatever.
Where are those?
Yeah, where are they? Weren't they going to happen in like New York or somewhere crazy in America?
They were going to do some testing in Australia, in Melbourne, I think, or in Sydney.
Oh no, yeah, it was Melbourne. Yeah, it was Melbourne.
Yeah,
it was. I remember.
So that was like 2 years. Yeah. I feel like that was 2 years ago at least. That was a long time ago. So I don't know what happened with that. I guess Uber doesn't really have any money, so kind of makes sense that they would drop those kind of projects. But that would be cool, though. We're going to need that because otherwise the roads are going to be clogged. You think they're clogged now? Imagine when everyone's got autonomous vehicles and everyone wants to drive because it's cheap. And
that was another interesting argument that Elon was saying. It's just like this is on his like when he talks about his tunneling ventures. He's like, people don't realize that in the future that we're going to have a like 10x more traffic than what we have now, because if autonomous EVs become a thing, the cost to ride in one will beat like a bus ride or a tram ride, like the cost of a tram ride. So naturally, he imagines people will trend towards the EV because you just get to sit in there by yourself. There's no one around you. You can just chill out on your phone, and get from A to B. But yeah, that's going to cause a lot more traffic. Imagine if people started not taking the train or not taking the bus because they wanted to take the car instead.
Yeah.
It's like that's a lot more people on the road.
Yeah, they might have to put limits on how many vehicles, because if everyone just has like autonomous vehicles out on the road and everyone's earning, like they're just out there just driving around picking up people, they'd have to just eventually probably just put limits on how many vehicles could be out there, or they just...
Yeah, or like it'd be like an anti-congestion charge or something like that. There's plenty of those around. I think I could be wrong, but I think someone I know, their parents, they live in Singapore or something like that, and I think it costs them like something like honestly crazy, like $70,000 a year to be able to like have a car in the city or something like that. I can't remember. Yeah, like an anti-congestion charge or something.
Boy.
I don't know. I could be wrong there, but I believe there's something like it's just like
it sounds reasonable.
Insanely expensive. Anyway, that's enough about self-driving cars. That's what Tesla's up to. Can we just quickly cover this inflation? Tidbit.
We'll cover this quickly
before we wrap up.
Yeah,
today?
yeah. We'll sneak this in at the end so we don't bore anyone too much with it. But UK inflation data came out this week. Their CPI rose. Have you looked at this yet?
No, I haven't.
Do you want to have a guess? So US was 9.1. I think UK last time was like 8 point something. So, sorry. UK was 9.1 in May. It was
really?
9.1.
Geez. So I'm going to guess it's going to be more than 9.1.
You'd be correct.
10?
Not quite. Not yet. 9.4. 9.4.
So the month still big.
Yeah. It's pretty bad. Month over month, 0.8% increase. Biggest contributors: fuel and food. No surprises there. So those are the two big increases. Bank of England, their central bank, expects inflation to peak at 11% later this year. Of course, central banks are notoriously bad for predicting inflation, so take that with a pinch of salt. But Bank of England is actually projecting higher inflation compared to the Federal Reserve, who continues to believe that inflation will be
for the year's going to come in at 4% or something like that.
It's going to be 0. It's going to be deflation for the rest of the year. So we'll see if that happens. So someone made an interesting comment on our podcast about how they're trying to, if people's expectations for inflation is low, then it might help drive lower inflation. And that certainly is true because it can impact consumer behavior. But yeah, it just depends on whether people actually have confidence in the central bank's prediction. And I don't think anyone has any confidence in the Federal Reserve when they say that inflation is going to be 2% by 2022. So that is what it is. But the Bank of England has done 5 25 basis point rate hikes so far. And Governor Andrew Bailey this week suggested that 50 basis points will be necessary, which in the UK, they haven't done a 50 basis point rate hike in 30 years. So this would be a big move for them. But yeah, it comes in line with what the US is doing. Actually, it's a little bit behind what the US is doing, hence the US dollar being stronger than other currencies around the world at the moment. So there you go. That's it. Little short, sweet.
There you go.
Inflation news.
Short,
it's
short
not sweet.
Sour.
Short and sweet.
Short and salty. All right. Well, that will just about do us for today. We just got carried away with earnings as we normally do. We like to talk about companies.
It's very generous of you to lump yourself into that. I got carried away with
No, I'm looking at the waveform here, and there's at least equal amounts both Tesla and Netflix.
Okay.
Yeah. So anyway, but we still do want you guys to send in questions. So head over to the YouTube version of the podcast and leave us a comment. You can ask anything you like, really. Or if you have a topic you'd like us to talk about on the podcast. Earnings season across the next little while, so there'll be plenty of big companies I'm sure that we'll be covering as well, alongside the normal stuff that we talk about. So yeah, anything and everything you want to leave in the YouTube comments, please feel free to do so. Apart from that, guys, we will get out of here. With that said, thank you very much for listening, watching, and thank you for sticking with us while we navigate through this Spotify debacle. Really hope this week that it's all good. Should be. It should be. Although we said it should be good last week and it definitely wasn't.
Yeah, okay.
So we do apologize for...
We'll sandbag it. It's not going to come out this week, guys.
No. Definitely not. In fact, look, in all honesty, Spotify's probably going to delete our podcast, you know?
Yeah, that's what you should expect.
That's ultimate sandbagging. Anyway, we hope we've got that figured out. Maybe we'll even try once again to put the video on Spotify.
Yeah,
maybe.
I'll try. Maybe.
Maybe. All right. Thanks very much for listening, guys. We'll see you guys in the next episode.
See you guys.